Who are the best lenders for Mayo Clinic residents and fellows here in Rochester, Minnesota? In this video, I'm going to share with you 3 great options so that you can save the most money financing your new home. I'm also going to share with you some of the benefits of the programs that these banks offer. And then lastly, I'm going to share with you how much a first-year resident can afford purchase price-wise on a new home and what their max payment would be if they bought a home at that price. So make sure you stick around until the end. The first bank option that I would recommend is the Mayo Credit Union. They're very popular here in town. They have 3 great lenders and I've had a lot of clients use them and get good feedback from them. So that's option number 1. Option number 2 is Think Bank. They also have really good programs. They have some very competitive interest rates. 2 gentlemen that work there are really great. I've gotten really good feedback from them as well. And then option number 3 is Home Federal. Home Federal has good programs, competitive rates as well. And basically with either of these 3 options, you can't go wrong. I've had a lot of clients very happy with all 3 of them. Now let's talk about the benefit of the resident and fellow loans. So the first benefit is you don't have to put any down payment. Usually it's up to about $500,000. Double check with the banks to make sure. Most residents usually don't buy homes in the $500,000, but if you have a significant other or you have some money saved up, you can certainly buy something in that price point. It gives you that flexibility. The second benefit is you don't have to pay for private mortgage insurance or PMI. So basically, with a traditional loan, if you don't do 20% down payment, you have to pay what's called PMI. So the nice thing with these programs for you guys is you don't even have to worry about that, and that'll save you a lot of money every month on your home payment. The third benefit is that the interest rate offered to you will typically be lower than the market rate. So that is something that's also going to help you save some money every month. And then the last benefit is if you do have student loans, and most resident fellows will have student loans, that seems to be pretty normal. So if you do have student loans, the bank won't count that against getting you pre-approved. And speaking of pre-approval, if you're watching this video, you're obviously interested in buying a house. The first step to buying a home is getting pre-approved, which if you're watching this, you're doing the right things. Before you start looking at homes, you want to know how much can you afford, what your payment would be and all that. The first step. And speaking of that, let's take a look now at what a first-year resident can afford when looking at buying a house. All right, so here I have the mortgage calculator. You can find this easily on Google. Just search for a mortgage calculator. And so first year resident makes about $67,000. You can find that on the online if you just Google that, Mayo residents first year salary. So $67,000. Let's assume that you're not gonna do any down payments. Let's assume that you have no debt, like a car loan or anything like that. Interest rates, I was talking today to a lender and I think bank, he was saying it was about 5%. If you do an adjustable rate mortgage, meaning that your payment is going to be amortized at 30 years, right? But your interest rate will be 5% for, you can do 5 years, 7 years, even 10 years. So without going into too much detail, let's just say that your interest rate is 5% as of today. Obviously that can change. Property taxes for a home could be $3,000 more or less depending on the price, so this will be variable. And then home insurance, I'm thinking $1,600 for a house. If you bought a townhome, that would be significantly less, or a condo. So again, these numbers will vary, but just to give you an example, typical like purchase amounts about $300,000 for, let's say, a first year resident. If you're a second, third year or fellow, obviously you're gonna make more money, so this will be higher. Let's say that you do have, let's say, some monthly debt. Let's say you have a $200 car payment, so that'll obviously bring your budget down a bit. And again, let's say the property taxes of the house you're gonna buy is now $2,000, so that'll go up a bit. Let's say your mortgage insurance goes down a bit. If you buy a townhome, your insurance will be lower, but then you'll have a homeowners association, so that would also kind of, you have to add that. So it all depends on what you're looking for, how much you can afford. But talking to the lender today, he also said it'll be about $300,000, maybe 300 to 350 seems to be that kind of range where residents will qualify. Again, depends on your income, but just to give you an idea. Now let's take a look at how much that would be payment wise. Home price, or actually let's change this to 300,000. Okay, down payment. Oh, I should have done this before, but down payment, let's say it's 0. And on the previous example, obviously, if you do some down payment, that's going to help, obviously, with how much you can qualify. Property taxes, $3,000. Home insurance, $1,700. PMI, thankfully, you guys don't have to worry about that. I'm going to delete that. And basically, if you bought a house for $300,000, your total monthly payment would be about $2,000. $1,600 more or less going towards the loan, and then taxes and fee about $392. So this should give you an example. Just to throw some market information here in Rochester, the median sale price right now is about $290,000. So at $290,000, you can expect to get a 3 to 4 bedroom home, 2 full bathrooms, two-car garage. It may be attached to the house, it may be a detached, and about 100 to 2,000 square foot. That's what you can expect at that 290,000. So if you bought something for 300, it gives you an idea. Another thing that I want to mention is when you're looking at a lender, there's two things that you can typically like negotiate or try to use as a filter to find the best lender. And that is the interest rate, obviously, and then something called the origination fee. Origination fee is basically what the bank will charge you to give you the loan, right? And so typically it's about 1% of the loan amount, and that will vary among lenders. Some lenders will also put like a maximum cap on what that amount is. So let me give you an example. Let's say that you bought a house for 300,000, no down payment, right? So you'll be financing 300,000. If the bank is charging you 1% origination fee, that's going to be $3,000. There's some banks that will say we'll charge 1% up to $2,500, right? So if you bought a house for 300,000, that's your loan amount, right? You end up paying the $2,500 because that's the cap. That's a good question to ask. I gave you 3 options. Do you have to contact all 3 and try to see who's the best option? Reach out to 1 or 2, ask these questions. Service is obviously important, so ask them about that. Ask them about the ways to communicate and see what kind of vibe you get. But typically residents will and fellows will say if they can give me a good rate and the lowest possible cost or whatever, that's usually a good sign. And like I said, I've had really good experiences with all 3 of these lenders. There's obviously some other options out there as well, other lenders, but these are, I would say, are the most common ones. Let me know what questions you have in the comments below. If you want to just reach out for a quick call, ask any questions. Obviously, I'm a real estate agent. I would love to help you out. And I hope you found value in this video, and congrats on matching at the Mayo Clinic and on all your hard work. Again, thanks for watching.